welcome. You're watching Managing Money with Moneycontrol. I am Sakshi Batra. Well, Budget 2020 actually brought in many tax changes, and in our shows, we have been constantly addressing all those changes and also simplifying things for you so that you can understand and make better decisions as per your finances as well. And even today, we are going to be discussing about the key fine print of the budget to really help you make sense of the tax changes that have been really announced. Joining me today is a very special person. I'm joined by Mr. Amit Singhania, whose partner, Shardul Amarchand Mangaldas. Thanks a lot, Amit, for really joining me on Moneycontrol. It's good to have you after the budget day. And let me begin my understanding from you. First of all, on the budget day, you gave a rating of 6.5 to 7 on 10 for the budget 2020 that was presented. And this was just when we were just trying to make sense of what kind of announcements there were. After 15 or 20 days, how have you really assessed the changes that have been made?
So thanks for inviting me. So yes, it's true that on the budget day that I gave 6.5 rating out of the 10 rating. And I think I will just increase the rating by 1 percentile basis.
Okay.
So 7.5. The reason is that there has been so many clarification of after the budget. So my primary question is that, and that too on a lighter note, why the government has not thought through all these questions. But the silver lining is that the government has been receptive about these changes. Government is accommodative upon the concerns raised by the industry, and that actually made me to increase my rating by one percentile. So my rating after 15-20 days of the budget is 7.5 out of 10.
All right, so let's actually move on. Now, in our previous shows, Amit, we have already helped our viewers understand the differences between the old tax regime and the new tax regime and help them really understand as to which tax regime will be better for them as per their own tax brackets. But now I want to really understand from you some more key details about as to whenever this switch happens, what are the things that all the employees and the employers must also consider?
It is very difficult to say or rather devise a particular thumb rule that if a new tax regime will be beneficial for a particular person. It all depends upon facts and circumstances of the case. It all depends upon the level of income which a particular individual or an employee is earning. However, the key point is that a salaried employee can only switch in this particular new regime once a year.
Okay.
For next year, he can again have an option to re-elect this particular new regime. For a person having a business income, it will be once in a lifetime. He will be given just one opportunity to switch back to the old regime.
Right.
So the individual needs to be mindful of this particular aspect. The second thing, if you are a salaried employee, is that how the employer is giving you an option to switch in and switch off from the new regime, because
Right.
employer is also incurring a interest rate at the rate of 1% for any shortfall in the payment of the withholding taxes.
Okay.
So because there is no mechanism or there is no provision which has been provided that the employer will not be liable to pay this interest on the shortfall of the withholding taxes basis the election made by the employee. So suppose if an employee makes an election and during the course of the year he realized that he made an inaccurate election.
Correct.
And his tax liability has actually increased by virtue of this particular election and he actually opts out. So the employer will be left high and dry and he will be required to pay 1% interest upon the short withholding of the taxes. So that needs to be mindful, and I'm sure the government is also aware of this particular problem that has actually arisen, and they have not thought through. I think they will come out with a circular, maybe the TDS circular which they come out usually at the fag end of the year, which they might advance this particular circular and they might come out with a clarification that this particular interest will not be. But what we are hearing from the client, they are actually giving option only once a year.
Right.
So once you have opted for it, you will not be given an option to opt out by the employer, and that is a matter between employer and the employee.
All right.
Because otherwise the employer will be exposed to this particular 1% interest upon the shortfall of the withholding taxes.
All right, so this is a very interesting and a very important point that you've brought out. But now, today, I want to really understand from you, Amit, what about InvIT and REIT holders? How should they view this?
So we have been receiving many queries from the InvIT and the REIT industry, and from the 1st of February, actually their structure has become inefficient. The reason is that previously into the DDT regime, there was no liability to pay tax upon the dividend received either by the SPV who is declaring a dividend and till the unit holder. So that was actually the quite a USP of the InvIT and the REIT regime. There was no liability to pay tax upon the dividend, not even from the chain of the SPV till the unit holders.
Yeah.
Now what they have done, they have shifted the burden from the company to the unit holders without realizing that in the earlier regime there was no liability to pay tax upon the dividend, which they have created a liability and shifted to the unit holder.
Okay.
So that has made InvIT and the REIT, rather I would say, most inefficient structure to adopt for, because now in case someone has to invest into the real estate company or to a infrastructure company, why will they actually create one more layer of the InvIT and REIT? They will invest directly in case they have to pay tax at least once. So the representation has been made, and we are hopeful that the government will be able to make a clarification on in this particular regard, because on the one hand the government needs funds into the infrastructure space, and on the other hand they can't afford to kill this particular industry.
Absolutely. So that is like a big thing and a big overhang that we really expect the government to come out with some kind of a clarification on that front as well. But Amit, what happens to, say, foreign companies having subsidiaries in India? Will they be beneficial, and will they be able to claim the tax that is on dividends as well?
Yes, so that has been the long-standing demand of the industry, at least for the subsidiary of the foreign companies, that you shift the burden of the DDTs, that means the tax on the dividend, from the company to the shareholder level, because the credit of the DDT is not available in their home jurisdiction.
Yeah.
So they would be quite happy now, since the burden has been passed upon the shareholder, whatever withholding tax that the Indian entity will entail, so that will be eligible for the credit in their home jurisdiction. But there is one important aspect, that this could arise to a litigation in future, because suppose if the Indian entity is giving a tax treaty benefit, and usually the tax treaty provide for a 10%, which is quite a concessional rate of the withholding taxes.
Correct.
If the Indian entity provide for a 10% concession, then the Indian entity could be subject to the scrutiny. The tax department can come back and say, look, on what ground do you think that your shareholder is eligible for a tax treaty benefit? So they can ask question whether your offshore company, offshore parent shareholder has a substance. What was the commercial rationale of routing the investment through the particular jurisdiction apart from taking a tax advantage? So they might be faced with these stiff questions. So these kind of litigation is quite common in case of a capital gain scenario. So I think this kind of a litigation will be borrowed in the dividend case also.
Right. Now I also wanted to ask you about another very interesting announcement that came in the budget, and that was VIVAD se VISHWAS kind of a scheme. So how should companies really view this scheme, and should they opt for it?
So I would say that whatever amnesty scheme that we have seen into the direct tax space, this is the most charming scheme, because it is only required you to pay the tax, which is basically 30% or 25% in whichever bracket that you may be in. The government is ready to forego the interest and the proposed penalty. So that is the most appropriate scheme that can one envisage for. Rather, if you see, the company is not even paying the principal amount of tax, because suppose if the litigation is 5-year-old, they were required to pay tax 5 years before. Now the time value of money, this particular 30% tax would have reduced to maybe 20-22%.
Okay.
So in effect, the liability to pay tax also get reduced in this particular scheme. But the most common issue which the companies are facing is regarding the cherry picking, because in a particular year, suppose if I am fighting with the income tax department on 5 issues, and out of these 5 issues, 3 issues are my recurring issues. Although I may settle these years for the previous year, but what will happen on the technical merit of these 3 issues, because these 3 issues I am going to fight with the income tax department in future also. So tomorrow they should not come back and say, look, I have already conceded on these 3 issues, therefore I don't have any case for the future year on these 3 issues. So this particular aspect is something which is quite burdensome for the companies. And if a clarification to this effect is being issued by the government in this particular effect, that will go in a long way in collecting taxes in this particular scheme. And just now I was just reading the news that now the government has actually linked the performance of the tax officer on the basis how much they are getting the tax collected under this particular scheme. So that
also will be taken into account.
Into account.
Thanks a lot, Amit, for clarifying a whole lot of doubts over there. But a lot of clarifications from the government's end is also needed with respect to the tax changes in the budget 2020. Hope this really helped out all our viewers as well. And in our next episode, we will talk about how should investors of small savings schemes view their investments post these tax changes. With that, it's a wrap here. Many thanks for joining us.